Thank you very much, Tim, and good morning or good afternoon, everyone. It gives me great pleasure to tell you about Neometals and particularly our story over the last 5 years, how we've pivoted away from upstream mineral concentrates for the critical raw materials to more recycling and recovery. I think, we've got there the world and it's green and it's getting greener, and we've got to address climate change. Everyone's got to try to remove carbon out of their business to the highest extent possible. And we saw that it's relevant now, but we saw that 5 years ago and actually changed our business to more materials recycling and recovery, which takes out the upstream mining and the upstream carbon. And on top of that, we recognize that we needed to develop sustainable, domestic, ethical supply chains. And so we planned our projects and processes around that. And now we find ourselves with the ESG tailwind. So, we will, we're very, very excited about our projects that will provide some of the lowest carbon critical raw materials specifically into the EU. Next, please. So NMT is a project development business as opposed to we do have upstream miners, but we're much more than a traditional mining company. All of our 4 core projects have a common intersection of massive exposure to the EV and ESS megatrends. I said we've done that pivot. We're going to concentrate on the EU projects. We've got a team with a growing track record, about 20 in head office. We organise the development of the Mount Marion lithium mine into the world's second largest source of hard rock lithium with Minres and Ganfeng. That's enabled us to basically have a future-proof balance sheet. We've got about $80 million in working capital and investments, no debt. We've returned $55 million in dividends in the previous 5 financial years. Next, please. So a little bit on the battery energy storage backdrop. And so, I've got a graphic here. We know the car's coming, but particularly the trend is fastest and most rapidly adopted in Europe. And that means that these batteries, we're confident of the car's coming. And what we're even more confident is that they wear out and there'll be significant volumes to recycle in the future. Next, please. And what's not understood is the carbon. Oh, next one. That's it. Is the actual carbon shock of these electric cars. The footprint of an EV, the carbon footprint when you drive it off the lot, is twice that of an internal combustion engine. And that's because of the battery. And within the battery materials, they come from Australia, South America, cobalt from the DRC. They have very, very high carbon footprints, and we're addressing that. Next, please. And particularly the Europeans. So not only are they going to have volumes, what we've found is that the EU have got what is proposed new regulations to go up for adoption by the EU Parliament. And so essentially recycling will be mandatory, 100% recycling. CO2 footprint declarations from 2024. So on the normal cars, you've got to put your fuel consumption. On the new cars, you're going to have to put the carbon footprint. You've got to have recycling efficiency of 65% of the products from the start, going up to 70. We're already at 85% after our pilot plant and planning to go into the 90s. And so, and then further from that, they're going to have minimum recycled content in these new batteries. Next, please. And so other than what I will show you to be pure economics, there's a number of reasons why recycling is not optional. We see the fire risks when these batteries are stored, and these are not even the car batteries. These are just the consumer electronic and phone batteries. We shouldn't put them in the landfill. They've got base metals and lithium in a sort of water soluble form, not great for the water table. Pollution, we're going to show you how our process takes out the greenhouse gas and the carbon out of the supply chain. And then closing the loop obviously helps with material shortages in Europe and really embraces this trend for the circular economy. Next, please. Next. So what I'm going to run through with our lithium battery recycling project, what is the opportunity? What do the incumbents do? Our solution, some of our unique selling points, the revenue model, and the current status of the project. So, we know that Europe is adopting the cars fastest in the world. The Chinese led So lithium battery production will be in Europe, will be the second largest in the world outside of China. And so what I've modeled here is the volumes of end of life batteries. And that's what we're fighting for. The big ones in light green, which are the end of life. In the interim, we'll have to build a small plant, 20,000 tonne, but we're going to have to ramp that up to our planned 200,000 tonne in time to take the end of life batteries. And so the prior art. So, you know, if you want to make a battery out of traditional raw mine materials, there's about 8 tons of CO2 per ton of batteries. The incumbent recyclers melt them. So they put them in a pot or a kiln. Instantly, they lose about half the mass. The graphite gets incinerated, which is the anode or the negative side of the battery, the plastics, the electrolyte, and they basically get dirty sort of metal that they have to refine. We're looking at stripping out more than 90% of the carbon in our hydromet process, which is proprietary. So essentially what we've done is we've created a new refinery for producing base metals and lithium that's not accepting mineral concentrates, but accepting batteries. So the trend is to less cobalt rich batteries. So what I've modeled here is in a ton of 811 batteries, which is what they really aspire to produce in the next couple of years. A ton of those batteries is the same as having a ton of ore in front of your plant that's 15% nickel, 15% copper, 2% lithium, and 2% cobalt. You know, that's just fantastically rich, those grades, and you can't find those in nature. So what we've been studying, we put out some OPEX and CAPEX today, was for a 50 tonne a day plant or a refinery that can handle 50 tonnes a day of these batteries as feed. And the unique selling point is the economics. We'll be able to share in the economics with the car makers and the cell makers to get volume. Volume is the key for us because we've got good margins. And so we can afford to share those to guarantee a scale up. So today we put out the class 4 level accuracy, which is plus or minus 25%. These scoping study figures were 2019 based off a lab. The ones released today were based off a full pilot that we ran over 12 months in Canada, and it came out at $1,560, so just a 4% increase. The other unique selling point is our partner. So we've had a good idea. We started it in 2016, been a 5-year R&D process. We did a joint venture with SMS Group last year to make this a reality, to build multiple plants in different jurisdictions where we can't operate, and particularly in COVID times. So we're doing a 50-50 joint venture. We've incorporated that. We're funding a demonstration plant and feasibility studies looking at both 20,000 tonnes and 200,000 tonnes. We scoped them that size because out of the battery cell making plant, about 10% scrap out of a gigafactory, and there's about 20 gigafactories going into Europe. So 20,000 tonnes equates to 10% scrap rate. And then you got to plan for the 90% that get into a car and come back 8 to 10 years later. So SMS Group, they got 14,500 employees in 95 sites around the world. They're one of the biggest builders of processing plants in the world. So they can build and deliver on whatever's required, any size, any scale, any location. So we're very, very happy to have obtained them. So the demonstration plant, we're putting at their manufacturing headquarters in Germany. These sheds are Primobius, which is what we've called it. The Mobius loop meaning a never-ending loop. That's inside the shed. You know, it's Mickey Mouse. I mean, it's German engineered. And at this site, they've got 4,000 people. So, you know, it's a fantastic place to demonstrate to our potential feedstock customers and our off-takers how the process works. We've secured feedstocks from a car maker for the first demonstration trial and from Itochu from the second trial. In terms of revenue model, we're looking at service provider. People charge for the service at the moment. We don't model getting paid for that long term. We're happy to share with them to guarantee increased volume. So that's how we get the feedstocks in. And then obviously the revenues come from selling the products. And that's enabled us to, next one, sorry, I'll have to jump through a couple. Oh, I'll have to jump through a lot. I've been going through those slides and not telling you. Next. So that's the process. Next. They're the margins we make. That's Primobius. So I apologize to everyone. Keep going. Next, I think everyone gets a copy, so you'll be able to catch up. I'm just a bit limited for time. So next one, revenue model. Next. So the sum total is that we've been able to procure an MOU with the Tochu Corporation of Japan to look at putting a second plant in Japan, first one in Germany, second one in Japan with these guys, touch wood. They're the oldest trading house in the lithium battery market. They make cathodes, they make anodes, and they make their own stationary energy storage batteries. So we're going to be putting some of those through our demonstration plant. Next slide, please. In terms of indicative timeline, we are wet commissioning the plant next month, demonstration trials in July, and then we've got the Class 3 engineering, CapEx and OpEx is scheduled for October. We aim to finish a feasibility study towards the end of the year and consider a final investment decision in the March quarter of 2022. It will then, we forecast it'll take us about 12 months to build the hydromet capacity at the back to match the shredding capacity of 20,000 tonnes at the front. Next one, please. Next. So I'll talk about our vanadium recovery project. Next one, please. So essentially what we're looking at here is recovering high purity vanadium chemicals to go into lithium ion batteries. It's a new cathode material from the world's highest grade vanadium stockpiles up in Sweden. We're looking at doing that with a company called Critical Metals. We're earning into a 50-50 joint venture with them. We also are their largest shareholders, and the latest class 4 cost study shows that we can operate in the lowest quartile of costs, which is a function of the grade and the process that's proprietary to Neometals. It actually captures 65,000 tonnes of CO2. Next, please. So here's the flow sheet. So essentially what we'll do, the contract that Critical's got is to purchase 2 million tonnes over a 10-year period. So 200,000 tonnes of feed in, we grind it, and we leach it in a carbonic acid that we make by capturing CO2 out of emissions. That leaves us with a stabilized inert material as a tailing. And then we extract vanadium through the traditional route. Next, please. What's most important is a friendly place to put it. And at Pori, Finland, we've got a fantastic relationship with the city. Critical signed an MOU for a 50-acre site adjacent to a deep water port, adjacent to all the infrastructure, power, chemicals, heat, water, electricity, you name it. So very excited to be looking at Finland. Next. And more, we put out the pre-feasibility results this week, which confirmed that we can operate at the bottom end of the cost quartile. Next, please. So we're fully funded through to an FID decision. We've applied lots of money and lots of horsepower to accelerate this project. We completed the Class 5 scoping study 30 June last year. The pre-feasibility study was released this week, so that's ahead of time. The pilot plant, we are starting to commission that. That'll be finished in July. We'll move straight into the feasibility study, finish that by 30 June. Then we've then got 6 months to consider the FID and a conservative 2-year build out. Next, please. So I think, Neometals, in short, provides our shareholders with unparalleled exposure to the commodities that are most positively impacted by this new energy megatrend, right? We get graphite, lithium, cobalt, nickel from the batteries at the lowest points in the cost curve, which is fantastic. And we also get vanadium in the lowest cost quartile. So I think, if I want, next one, please, our shareholders to feel anything, I want one to feel secure. Got a fantastic balance sheet, 80 million in working capital, no debt. We can fund the developments through to FID. We've got a consistent strategy where we get strong partners to help us build at scale, reduce risk, realize returns, and then return them back to our shareholders. A strong board and management team. We've done that pivot towards more recycling and recovery as opposed to upstream minerals. This really resonates with the ESG crowd. We want to become sustainable investments. And we think, we provide, the opportunities are, one, to supply green critical metals into Europe, that create these secure, ethical, domestic supply chains. And we've got multiple catalysts across, a portfolio of five core projects. So happy to take questions.
Thanks, Chris. First question, and the audience wouldn't respect me if I didn't ask. Management sold some stock today?
Correct. Yes. After 20 years, I bought a new house for my family. So that what driven my sale of shares, and my father turned 75 in March. And so we're just doing some financial planning for his retirement.
We respect that, Chris. Now, you think 10 years ago when the company was focused on building mines in WA, that you'd be where you are now? In terms of your vision, in terms of positioning the company?
Well, yeah, look, we got Mount Marion in 2009, Nelly developed it in 2010, then with MinRes, and then there was a price war, and then we developed it in 2015 with MinRes and Ganfeng. So I guess we knew where the EVs were going to head. We're never certain about the time. So we've got to make bets looking out 5 and 10 years. And that's one of the tricks is, don't run into icebergs and then aim in the right direction. So we think we're in the right direction, but I didn't think it was going to happen so quickly and just so many opportunities in Europe, because we had been sort of WA focused, and, we're still looking at our WA upstream mining assets where we've got the world's second highest grade hard rock titanium vanadium deposit and 147,000 nickel metal tons in 11 sulfide deposits 50 kilometers from BHP's Kambalda concentrator. So it's a bit of an embarrassment of riches.
And you talk about Europe, and it's extremely commercial when it comes to funding with groups like the European Credit Agency, which help in debt funding. Are you talking to them?
Yeah, look, we've announced that we're looking at a compliance listing on London's AIM. It's our ambition to secure from the recycling revenues the green mark, which opens you up to the ESG pools of equity capital. And naturally, in Europe with the European Investment Bank and just the regulations, everyone's embracing it, and there are deep pools of debt capital available for these sorts of projects. I mean, one of them, you're taking carbon out of the atmosphere and you're supplying a battery material. And the other one is you're taking waste that would go to landfill, recovering value so that you don't have to import as much and strengthen the domestic industry. I mean, we've seen like just in Germany, they committed 135 billion euros in the second half of last year. So in Germany alone, there was about 55 billion euros in subsidies for cars. And then the German government's going to fund the build out of 77,000 high voltage chargers in 14,000 petrol stations, right? They've made the bet. It's happening. I know we don't really see it in Australia, but the tailwinds there are unbelievable.
It certainly is moving incredibly quickly. So do you align yourself with partners to position yourself in Europe, for example?
Yeah, I mean, you can't do everything. I mean, we've got a partner there, and people say, well, you gave away 50% of your business. No, I've got a partner there who can allow us to build multiple plants around the world and then scale up, which we couldn't do here. We couldn't do as Neometals. So it's like choosing tennis partners. They've got to be strong where your game's a little weak.
I'm certainly a lousy tennis partner, Chris, so don't rely on me. And finally, like you do have the titanium and the vanadium project. How do you kind of prioritize these? Is it eventually two separate companies?
Yeah, look, I mean, we're obviously able to have a look at the appropriate structures from upstream and downstream. We invest really based on the return on invested capital and the time frame to positive cash flow. And for that project, we've secured an MOU for a cornerstone offtake, and we'll just follow the Mount Marion playbook. It's got mining approvals to construct a concentrator. We've got to take a test pit, concentrate it, send it up to China. They'll run it in a commercial facility. If they like it, you sign an offtake, you sign a construction contract, and you get cracking.
And broadly speaking, what's your view in Australia in terms of what you're seeing in Europe doesn't seem to be playing out in Australia. Is that a fair comment?
Oh, no, it's just on a lag basis. Yeah, it'll happen here, but just later. Like the US is 3 years later than Europe. We're probably 5. Nothing to be embarrassed about. There's no prize for being first.